Good afternoon, ladies and gentlemen, and welcome to another instalment of Survive to Thrive with myself, Nick Baxter, and IsoNation. We've got a really exciting show for us this week, and it's all revolving around the budget. Long awaited on the back of some considerable expenditure from the government to kind of support and prop up the economy over the pandemic. We were quite unsure as to how the budget would pan out, and what we've got two fantastic expert guests. We've got Josh Mulira of Josh Mulira Wealth Management, a partner practice of St James's Wealth, and we've got Ali Hayward-Wright from Hayward-Wright Accountants as our expert guest today. So thank you very much, guys, for joining us, and welcome, Josh. How are you, buddy? You well?
Yeah, good. Thank you, Nick. Thank you very much. Yeah, good to be here.
And Ali, how are you, buddy? You well?
Yeah, really good, pal. Really good.
Excellent, excellent. So just by way of introduction for those that haven't been involved in the Survive to Thrive shows, or indeed the IsoNation initiative, IsoNation is actually 12 months old now. It was a brainchild of Christian Collison from Nifty Communications, and what he did, he came and met with me in March and said, listen, I think I've got a fantastic idea to create a business community online to help support each other as we navigate the pandemic, sharing best practice with leaders' insights across the UK. And we reached over 700,000 individuals through IsoNation. We reinvigorated it through lockdown 2, and then lockdown 3 we decided to come back, but we decided to come back with a different angle on it, and we called it Survive to Thrive. So beyond the treading water of the previous 10 months, the last couple of months, people have said, listen, we want to put a line in the sand as to how we're going to operate now. The level of uncertainty is going to be here for some time. We're not going to wait for anything to occur. We're actually going to start trading and making strategic decisions. So the Survive and Thrive program was here in 5-week installments to kind of navigate that new landscape. And we decided quite pertinently on the back of the budget this week that we'd highlight some of the key areas. Now, we understand it's quite a deep subject matter, and lots of people have been involved in lots of webinars, so we're trying to make it as informative yet as human and light-hearted as possible. And we knew that there was a whole host of factors in there to affect the cross section of the population, but we wanted to make it pertinent for two sectors. One, the SME business community, which is what Ali is immersed in from his accountancy practice perspective, and then from a business leader's perspective, and to encompass all things around financial planning, we wanted to make sure that we got the insight from Josh as well. So and then obviously every single week I always put my element in around the people strategy from a recruitment perspective, how the show's topics have affected people strategy. So we knew that, I don't know, I mean, tell me, Ali, what were your thoughts based on 407 billion pounds worth of expenditure? How did you think Rishi was going to announce the budget on Wednesday?
We were certainly, I suppose, we were approaching it with a little bit of trepidation, so this, because at the end of the day we've got to pay for this somewhere. But it's been quite refreshing to see, actually. I think in the grand scheme of things, I think what's been delivered has been delivered quite well, and I think we've got some opportunity in there as well. And it does feel as though the basis of it gives us 18 months, couple of years to really build and recover from what we've just been through.
Excellent. And Josh, your thoughts?
Yeah, I think he did what he said he was going to do. He said he was going to continue to do whatever it takes to support the economy, jobs, people, businesses. I think he's definitely done that. He said he's going to fix the public finances, but critically in an honest and open way. And I think he has been pretty honest and open with where he's getting the money from and how, although not much of that just yet. I think we'll probably see that in budgets to come. And then he said he's going to start to begin building on our future economy post the pandemic. And I think we can start to see, his idea of how that's going to play out. So, yeah, I think we got what he told us he was going to give us.
Excellent. And I think having spoke with there's only been one real narrative since Wednesday amongst a lot of my C-suite conversations, and they are around actually he's been very consistent in terms of what we thought, exactly what we got. I think that the big thing is that we all know that there's going to be some level of austerity. We know there's going to be a way for the government to claw that money back, but what Rishi has done. And he stood by us. He said, we're going to wait till we see some element of economic recovery before we start digging into the collateral of everyone's coffers. So I suppose I'll chat first, and mine's going to be very, very brief, really. The big thing from an employer's perspective around their people was the fact that we knew that furlough is going to be extended, and we know that's going to be extended till June 2021, which is going to be fantastic. You know, the furlough scheme has been probably a large proportion of that government spend in terms of helping organisations to prop up the biggest cost base in their business by not losing them, not having to make redundancies, not having to reduce people's hours. But the furlough scheme has been fantastic, and I think that was we didn't know that we were going to be in lockdown 12 months later, and we figured that like most, Ali, and correct me if I'm wrong, and Josh, we figured it was going to be a 3 to 6 month situation. And exactly, and we thought that the furlough scheme was going to be the ideal crutch. It then turned out to be more of a mobility scooter, really, to kind of help people to navigate the following 3 and 6 months. I love my analogies; they're great, aren't they? Off the cuff too. But joking apart, it's been great, and I think for me, the best thing about the furlough scheme is the flexible furlough scheme, because it wasn't the case of having to keep someone out of the business. We knew that if your business was constrained or reduced, or the tap had been turned off to a 20, 30, 40%, it enabled you to match your workforce or plan from a capacity planning perspective, and it enabled you to put the right bums on seats to make sure that you were still trading effectively and there was no real cost to the business. So I'm really pleased. And without further ado, I suppose I'll go straight to Ali. Ali is the proprietor and the owner of Hayward-Wright Accountants. How many offices have you now got? I can never keep track of your acquisition plans, Ali. How many have you got at the moment?
3 at the minute. 30,
okay.
30 odd, something like that.
Okay, so a team of 30, fantastic business, and I've known Ali both in a personal and a professional capacity for the last, it must be 15 years now. Always really honest with his advice, always straight down the line with some real positive solutions in enabling that SME business community to manage their finances and manage their strategic plans as well. And I've been privy to some of that expert advice over the years. So it gives me great pleasure to bring you on today, Ali, to talk about some of the integral parts of the budget, how that's affected or likely to affect over the next 12 months the SME business landscape. So I know we're going to be talking around corporation tax. We're going to be talking around the fantastic tax allowances around plant and machinery. We're also going to be looking at VAT within that hospitality and leisure sector, which has literally had the legs chopped off it. And we're also going to talk about the business asset disposal relief. So I suppose the first one, corporation tax, we know it's not going to be prevalent for a few years, but talk to me a little bit more about what that will look like moving forwards.
Yeah, I think this was the one that came as a little bit of a surprise. We were fairly certain that we were going to see an increase in corporation tax, because it was kind of one of the logical places that we could get some money back in. But I think a lot of people were expecting kind of a stepped increase, similar to the way the corporation tax year ago came down. They were expecting it stepped back up again. We haven't got that. We've got quite a significant jump from 19% to 25% coming in April 2023. They've brought back some old rules from a few years ago, which mean if you've got profits less than £50,000, you'll still only pay 19% as we do at the moment. But anything above £250,000 of profit will be charged at 25%. And then we've got a really complicated calculation in between those two. So between 50,000 and 250,000, we get this thing called marginal relief, which basically, from a professional's point of view, means I can't really tell you what percentage tax you're going to pay in that window, unfortunately. But it'll come down to a calculation each year, unfortunately. Well,
You okay there, Nick?
I was going to say, I got you, Josh. I couldn't.
Yeah, I think Nick's dropped out for whatever reason.
I
just might as well add on to that, Ali, whilst you're talking about it, so I don't need to repeat ourselves later on. Yeah. I think from a personal finance perspective, and certainly you'll be helping guys out with this, but company directors, they're going to need to revisit their remuneration strategies, I would have thought, and make sure that they've got the optimal balance between their salary and dividends, which is going to be different for everybody depending on the profits that, you know, if their profits sit between 50 and 250,000 pounds, like you say, it's going to be quite difficult to calculate, isn't it?
You're absolutely right, and I think we're talking to people already about planning for this, because we're going to need proper information to know where they land in that, because if they land in that band, it could mean significant savings if you can plan yourself to either bring you down or bring you up or whatever. And obviously the interaction with kind of pensions and stuff like that is going to be so important. There's also, I mean, it's been rumoured for a while, nothing came out of the budget, but there's suggestion that they'll revisit the dividend tax rate as well, maybe in the autumn budget, which again will come back to this whole remuneration planning being so important.
Yep. I think Nick's dropped out, so I guess you might as well crack on with your next point, Ali.
Oh, Nick, are you back? Nick, see, I suppose that's the kind of I suppose that was the kind of the negative out of it, but let's face it, we knew we were going to have to pay for this somewhere. But what's encouraging from our point of view is they've come up with this super deduction for plant and machinery investment, which looks quite interesting actually, and will obviously tail in with that corporation tax rates as well. I think I've got you back, Nick.
Oh, guys, can you hear me?
Yeah, I've got you back, Nick.
I'm so sorry about that, guys. I had an internet issue there, which I lost. I'm assuming that you just concluded the corporation tax element, yeah?
Well, don't it's like you dropped out of a song and came back in at the right point.
Well, you know what? That's so terrible. Literally, everyone in the office has been running around like headless chickens trying to sort stuff out. We had the IT guys and everything. Apologies for that, guys. And what I won't do is I won't put everyone.
Oh, Nick, I've lost you again, mate.
Doing is I'll go. I spoke to someone yesterday who operates in the engineering manufacturing space, and they were really keen to make sure that they took advantage of the plant and machinery tax allowances. So this is going to be a really prevalent one. 54% of our economy in Worcestershire is engineering and manufacturing. So it'd be really nice to get your take on how this is going to impact and help, I suppose, develop people and their mentality around growth during the pandemic with this relief.
This is quite interesting, actually, quite exciting. This, so we've kind of never been done before, where they're giving us tax breaks for investing in plant and machinery. So if you spend 100,000 quid on a piece of machinery, you'll actually get tax relief on 130,000 pounds. Kind of the rates tie in with the R&D stuff as well, which is quite interesting, and it gives that flavour of trying to encourage businesses to build our way out of the pandemic and what we've been in through in the past. And that kicks in from the 5th of April. So we've got a kind of a month to wait before that kicks in. So there's been a few panic phone calls to stop people doing and buying machinery and buying vans and stuff this month. Just cancel the order, wait.
till it all kicks in. And yeah. So talk about that relief. What does the relief look like? What are the practical benefits?
So essentially, we're getting a tax saving. So potentially, with the way that corporation tax is at the moment, 19% corporation tax, means that we're going to save 19% tax on 30% that we haven't even spent out. So as I say, so on a £100,000 machine, which you would have saved £19,000 of tax previously. Quick calculation on that going forward, we're actually saving 24,700 of tax. It's kind of £5,000 additional tax saving.
Wow. Okay, that's massive. In terms of your, say, for example, your client base, who will benefit the most there? Is it going to be sector based, or is it going to be?
Funnily enough, it's been flagged up in one of our seminars we've done, but it kind of precludes the service sector a little bit, unfortunately, because they don't tend to have that investment in plant and machinery. But certainly the manufacturing sectors, and wider than that, because it will cover. We understand it will cover commercial vehicles. It doesn't cover cars, but it does cover commercial vehicles. So that'll be a bonus for a lot of businesses, to be fair.
And what about, so to talk about the service industry and particularly because the service industry is changing. I mean, we looked at Amazon, the first Amazon shop. You know, we had in our meeting today, the Connect meeting today, we talked around retail and how that space is changing. Will those guys be able to access that relief on any investment into technology?
Yeah, potentially. So certainly hardware and stuff will fall within that category. It's not going to cover, frustratingly, it doesn't cover things like the investment in maybe in the intangibles, so things like websites, that kind of stuff. Unfortunately, it doesn't look like it falls under it, but certainly a hardware sector.
Sorry to interrupt. So EPOS systems, scanning, yeah, okay, because this is what's happening. You know, this click and collect mentality and the shift. It's some really exciting stuff that's happening there. I mean, that's another survive to thrive in itself. But okay, so that's going to be another way, and that is a real. I mean, Rishi and the government there. That's a real statement, isn't it? That's saying, regardless of what's going on here, let's invest. If you were going to invest beforehand, or you saw that there were some additional revenue streams that were dependent on a level of machinery investment, still go ahead with it, because we're going to help support you. It's going to create jobs in terms of, hopefully, in terms of some of the products that get manufactured here in England. It's going to help. It's going to create jobs in terms of creating additional revenue streams for products and services that we're now going to be able to create, and markets we're now going to be able to attack. It's a plus point, and it's not a gesture. It's genuine, isn't it?
Yeah, absolutely.
Awesome. Okay, and then the next one I want to talk about, we talked about previously, and you know, the service industry, particularly the hospitality and leisure industry, that's been very, very difficult. A couple of my Goldman Sachs high growth alumni are in that space, and you know, the leisure industry, you do quite a bit within the licensed trade as well, don't you? They normally work on 6 weeks worth of cash, don't they, in the bank? I mean, how have you seen, before we talk a little bit more around the VAT and hospitality, how have you seen the impact of that across your own client base within the licensed trade?
Oh, it's been massively painful for some. Some have come through well with some clever planning at the start, but on the whole, that's just been so tough. Furlough's been massive. You touched on it at the start, Nick. The flexi furlough, when they brought flexi furlough in, that was brilliant, because it allowed people to you know, the takeaway services and stuff like that, allowed them to access that and provide those services without losing that furlough support in its total. But yeah, we were really concerned about, obviously, the drop in the VAT rate for the leisure and hospitality worked really well, but we were getting really worried about this kind of cliff edge. Suddenly jumping it from 5% back to 20% would have, at this time, because we're not out of this pandemic, would have just written so many businesses off. It would have been untrue. So the fact that 5% has been extended to the end of September, and actually we've got a stepped up rate at that point, because it doesn't then jump back to 20% at that point. We go to 12.5% for a further 6 months. So that stepped approach is, I think, encouraging.
It's going to be critical, because even though the floodgates will open, hoping if the R rate stays low and the vaccination process continues at a remarkable and a very impressive pace, even though the people are going to be back into pubs and nightclubs and restaurants, and they're still paying for 8, 9, 10 months of no income. So, you know, the graduation helps just manage that cash flow, because, you know, cash flow is king in every single business, but none more so in a business that only really operates in their optimum income is at, you know, within a very small space of time.
Yeah, you're absolutely right. And it feels like it was absolutely the right thing to do, because actually there's actually some optimism in that space at the moment. We're working with a few people who are actually looking at it as a massive opportunity, but you're absolutely right. They need that buffer to get back on the feet.
Yeah, I love it. And then the last one from you, the business asset disposal relief. I wasn't aware of that till we spoke a couple of days ago. Tell me what the impact of that is, and how that's going to benefit the SME community, and who in the SME community benefit.
So this is what used to be known as entrepreneurs relief. So it's essentially allows you to dispose of a business and pay only 10% tax, which is obviously very cheap. Got renamed as business asset disposal relief last year. Certainly the tail end of last year, there was real concerns that actually this might get scrapped in the budget this week, to the point where I think we've had 4 businesses trying to rush deals through to get businesses sold before the end of March, just in case this relief went. They've left it well alone in the budget, haven't touched on it at all. but we think it's only a state of execution, to be honest. We still expect there to be something done with it and either tweaked or changed or scrapped completely. Potentially, we may still see some announcements towards the end of this month on it. If not, we think there might be something in the autumn budget. So it's something just to be aware of if people are considering sale of businesses. It's something that needs to be given serious thought to in very, very near future.
Okay, excellent, and a really nice one to finish off there. If businesses are being sold at the moment, that's what we want. We want to see businesses being bought. We want to see businesses being sold. It's a sign of growth. It's a sign of where potentially new jobs can be created, and we want to make sure that that's stimulated. So great bit of advice there. And Ali, thank you very much for your insight on some of those telling factors on the budget and how they affect that SME community. What I want to do now is I want to reach over to Josh Mulira, and Josh is going to talk to us about all things that are pertinent really to financial planning. We've got stuff that affects the business. Josh's main clientele will be business leaders within that SME community. So tell us a little bit more. I know we're going to talk around taxation, coronavirus measures, and some other bits and pieces. Where do you want to start, really, Josh, from your perspective?
Yeah, so Nick, I think I've pulled out 5 things, one of which I think we've already covered, that I think were really pertinent to financial planning. So in order, they were income and capital gains tax, the COVID income support schemes, stamp duty, land tax and mortgages, pensions and corporation tax. So we've done the corporation tax. So perhaps if we start with the income and capital gains tax.
Brilliant. Okay, fire away and tell us what that looks like this year in the budget.
Yeah, in many regards, it's no change. So they've essentially frozen the allowances, exemptions and thresholds for income tax, capital gains tax and inheritance tax based on 21-22 rates. So there will be a slight change in this April, but then they should be frozen all the way out until April 2026. So what does that mean? So that's not really ideal for a lot of people, really, because hopefully over that 5 years, people's incomes, etc., growth on their investments, is going to grow. But the allowances and the exemptions, etc., are not going to be really growing in line with that, which means that ultimately people are going to be paying a higher proportion of their income and capital gains, back to the exchequer in tax. So I think really what that means for financial planning from an individual perspective is really it's even more important than usual to ensure that individuals structure their assets, their investments, and where possible their income to take maximum availability of the allowances that there are. There are still the allowances, it's just that they're not changing. So that's really where you need to spend some time doing it yourself. And if you can't do it yourself, or you don't have the time to do it yourself, ask a professional to help you out and just see where you can scrimp and save a few quid here and a few quid there, because it all quickly starts to add up.
Love it. Okay, excellent. And in terms of, is anyone having, in the short space of time since that budget, are you having conversations with people about that now to find, as you say, to make sure that people are taking advantage?
I mean, obviously not. We've only had sort of like 24, 48 hours. People I've had a couple of capital gains tax queries so far, but no, really, it's just a case of I tend to work with people on a long-term basis. So we'll put in place a plan, and then we'll review that plan based on what's happened in this budget for all of my clients, and we'll go from there. It should only really be a tweak, and because to make and essentially because things haven't changed so far. If you had it in place already, you probably got it in place now. But if you haven't got it in place, you're going to be even worse off than you were before, if that makes sense.
Brilliant. Okay, it makes a lot of sense. Basically, a lot of your guys, you already got the plan. It's only a tweak, as you say, because it has been frozen. But for those that haven't, they could be on the back foot if they don't start implementing some of that now. And I know I'm one of those. So I will swiftly move on. We'll swiftly move on to the second point. So what are you going to talk about next, then, Josh?
So the COVID income support schemes, and we did discuss furlough a little bit. So both the furlough scheme and the self-employed income support scheme, have been extended until September. I think 2 key points to that, really. I think the first one is that employers need to be aware that they're going to start to be expected to contribute a little bit towards the 80% for their furloughed staff, and that's going to be starting as of July. I can't remember the exact amount, and it's not a huge amount, but one to bear in mind. And the second point is that for self-employed individuals who hadn't put in a tax return, those which have put in a tax return for the tax year 2019-2020 are now eligible for the self-employed income support scheme. So that will bring a lot of other people in and eligible to that, which, you know, both of those things are going to be hugely welcomed by those that are in receipt of payments or those which are now eligible to get payments. But I also think that, you know, it should be good news to employers as well, because obviously we don't know what's going to happen with COVID. Like you said at the beginning, I think they thought that they managed to put the furlough scheme in. It would last 3 months. It would cost a lot of money and it would be done. They kind of made a rod for their own back. They put it in and now they've had to keep it going for a year or over a year or whatever it's going to be. So they need to slightly wean individuals off that. And now the government have come out with a date that's sufficiently far in the future that businesses can start to plan. They can work out who they're going to bring back, how they're going to bring them back, how they're going to pay it, and how they're going to get back to normal. So, you know, I mean, the only thing worse than not knowing what to do is not having any information. And at least now we've got some information against which to plan.
And people can start planning. Yeah. Okay. Excellent. Really good point. Really good point. And next on the list, Josh.
So that was stamp duty, land tax, and mortgages. Now, I appreciate this isn't applicable to everybody, but to those whom it does affect, it's a really big emotive issue. So there was they increased the band for the stamp duty, land tax, which basically took a lot of people out of paying stamp duty, land tax, and quite drastically reduced the amount that some people were going to have to pay. I believe that was due to finish at the end of this month. That's been pushed out for I can't remember off the top of my head how long for, but it has been extended. And also they've introduced a new mortgage guarantee scheme, which essentially is going to help people get on the housing ladder. Now, whether or not this is applicable to people on this call, I don't know, but I guarantee it will be applicable to lots of your employees. And, you know, as we mentioned yesterday, Nick, when we're talking about leadership, you know, there's a difference between leadership and management. And I think for me, leadership is about really like looking after your people. And to look after your people, you need to understand, you know, their wants and needs and what's available to them. And so understanding the effects that some of the things that we might gloss over will have an effect on the people that we employ is also important. So that's a key one to note, I'd suggest: stamp duty, land tax, and mortgage.
Can I before you carry on, and I think it's really important because it's bizarre because I didn't realise what was happening. I think it's so you can have 91 to 95% mortgages, and it's only for repayments. So it's aimed at stimulating that market where people can't really get the big deposits and equally so can't afford to pay repayments and interest at the same time. And sometimes we forget about it as business owners. We forget about it. You know, we live in our fifth, sixth house. We don't. It's not really prevalent to us. But actually, there was a conversation in the office today with one of my guys that's looking to get their mortgage, and they were like, when we're torn between, do we wait and put the process back till April? And you're right, leadership is about making sure that you understand the ramifications of how this affects some of your guys, and equally so if you can advise. So just before I jumped on the call, we started to talk about it, and actually there was a discussion in the office about it. It's those conversations that we need to have, because ultimately, you know, we have a housing crisis in the UK at the moment, but we also have a situation where it wasn't as easy as my generation to get their first mortgage, and we've got a whole generation of people living with their parents while they're saving up. So this is really prevalent because this really helps people from an esteem perspective, from a financial planning perspective, just from being able to get on that ladder, which is, you know, such a milestone for all of us. It's really pertinent. So sorry to interrupt there, but you're right, the leadership piece and the whole financial planning piece, it's really pertinent we recognise it's not just you don't just look after people who are C-suites that are high earners and high net worth individuals. They're also very aware of the people that work for them, because as we all know, without those people, we don't have anything. All right, sorry to interrupt there. Yeah, carry on, Josh.
No, that's it. So I think really two more, and the final one, which we covered off, so we don't need to go again, was corporation tax. So
yeah,
the last real point for me is about pensions. And again, this was a budget. It's quite odd. There wasn't a lot that came out of this budget, but by standing still, it is having impacts. So the only real change to pensions is that the government have chosen to freeze the lifetime allowance. So that's the overall value of your pension that it's allowed to reach before you have to pay a lifetime allowance charge, which you really want to avoid because they're quite high. So essentially that means that your pension pot can only grow to 1.073 million, and that's going to be the lifetime allowance out till April 2026. Now that does sound like a lot of money, and it is a lot of money, but hopefully it's something that we all aspire to achieving, because not least because of all the benefits there are to especially business owners contributing to a pension. What's this going to mean? So in the short term, if you're retiring in the next financial year, I doubt that this change will have any impact whatsoever. There's hardly any change, and therefore if you were going to breach, you were going to breach, and if you're not going to breach, you're still probably not going to breach. However, if you're looking to retire in the next 5 years, let's say, then you could have reasonably expected the lifetime allowance to be about £1.2 million in April 26. And if that was the number to which you were planning, or your advisor was planning to, there's almost a £200,000 delta there. So again, that's probably going to bring a number of people potentially into breach that weren't going to. But all is not lost. There are still quite a few planning opportunities and things that can be done. So if you think that you're going to find yourself in that position, then I'd urge you obviously to get in touch with your advisor or find an advisor and see what you can do. But I think what I would like to say though is that should in no way put individuals off pension savings. Pension savings are so important for a number of reasons. But like trying to narrow it down to why it's important to this audience, I think there's potentially two areas, and that's higher earners. So those that are earning £100,000 plus. Okay, there is an opportunity to regain your personal allowance. So without going into too much detail and boring people on a Friday lunchtime, for every £2 you earn above £100,000, you lose £1 of your personal allowance, which means that there is a income band between £100,000 and £125,000 where you're effectively paying a 60%, that's right, 60% income tax rate. So, and you can ameliorate that by making pension contributions and reducing your income, etc., etc. So that's still there to be done and should definitely be considered. And the second thing is, again, for business owners, and Ali can probably talk more to this if necessary, but it's a really good opportunity method of extracting profits from their business in a really tax efficient manner, and that's because of the corporation tax relief that that you can get in and around there. So I mean, to sort of draw together the whole pensions point, the lifetime allowance is staying where it is. If you're retiring in a year, don't worry. If you're retiring in the next 5 years, it may be an issue. If none of those things are applicable to you, then I'd urge you to keep using the pension to your advantage to legitimately minimise your tax bill.
Love it, Josh. I love it, and a really nice way to kind of round off the chat today. I want to say a massive thank you. It's been informative, but you've not made it too heavy, and you've not made it too boring. And having known both of you guys collectively for most of my life, it's been really insightful, and it'd be really nice to kind of get. I'm just going to have a look to see if we've got any questions, because I jumped out of the call, I jumped out of the messages. But what I wanted to do was say a massive thank you to Josh Mulira of Josh Mulira Wealth Management, partner practice of St James's Wealth. I also want to say a massive thank you to Ali Hayward-Wright from Hayward-Wright Accountants. Thank you for your time, but more importantly, thank you for your insightful and very expert views. The budget, there's been some movement, some areas, some movement, and not so much in others. I think we've got bigger bigger fish to fry next year, but for now it was more a case of let's trade, let's get the economic recovery to where we need it to be. And I think I've certainly valued your input, and I know that the guys and ladies and gentlemen that have been watching the program would have valued it too. So thank you very much for that, guys. All the very best to everybody that's watched the webinar today. Have a fantastic weekend, and look forward to seeing you all on Friday next week for another instalment of Survive to Thrive. Cheers, guys.
Bye, guys.